What's up, guys? I hope you are doing fine. So, this is episode 2 of Flow series. So, on today's episode, we're going to be talking about AMD. So, basically, I'm going to talk about just this schematic today, right? So, the next episode, I'm going to give us a live representation of what I mean by live. I mean real charts, real live example of what Flow series of what AMD really is. You understand what I'm saying? So basically that's that. So without wasting time, let's get to the whole stuff. Right. So AMD. AMD means is an acronym for accumulation, manipulation, distribution. Right. So the manipulation phase is usually where market maker or institutional players accumulate their position for their next play. All right. Getting ready for their next play. And the manipulation phase is where they trick traders to the other side of the market, to make them think they are going that way and then reverse the other way, right? And the distribution phase is where price actually really, really, in a sense, go to the real objective, right? Or where institutional players or market maker themselves, after tricking, retail, probably let's say, for example, right? This is price. Price went up just like that. All right. And then this is going to be like a manipulation phase. And the price would, in a sense, go lower like this. This is going to be like a distribution. So explaining the whole idea of um sorry, the whole idea of AMD, right? One thing you have to understand is that the collective understanding of what accumulation is, right? It's usually like a consolidation range bound kind of activity of price action. And meanwhile, it is not necessary for price to do that, all right? Because accumulation in the sense, price could accumulate liquidity to the sell side or to the buy side. And it doesn't mean that it has to create a range bound kind of activity. Price can go straight up like this and accumulate liquidity to this low, which is sell side, all right? And price could accumulate buy side by going down, which is this high. When price goes down just like this, price could be accumulating buy side in the real intention to actually take this high out. You get what I'm saying? So it doesn't have to be like a range bound activity. It can be like an active move higher, accumulating sell side, and an active move lower, accumulating buy side. So the idea is if price, in a sense, right, accumulates sell side, all right, price is going to come for this sell side, taking this low out. This initial move fake people out as if we are really, really buying, right? Which means, this is like an early bias or early buys, right? Price is going to induce this low out. So what price is really, really doing here is just kicking out buyers that are initially buying this move. All right. So after that is being done, right? Price will again reverse that move to the upside and distributing that to this high. Now, what you have to really, really understand about AMD. AMD is a price action fractal. Is a mechanism that price uses to accumulate liquidity, to gather liquidity, right? Let's say this is the higher time frame drawn liquidity, which is like a sell side liquidity, right? This low right here. Let's say, okay, let me give us a simple something like this. By the way, flow series is a very, very simple series, actually. Very, very, very simple, right? So let's say this is the drawn liquidity, higher time frame drawn liquidity, like daily or weekly. All right. And meanwhile, the last episode we spoke about draw on liquidity, higher time frame draw on liquidity, right? Draw on liquidity is like when you follow in the first episode, I told us what flow means. Follow liquidity, observe willingness. Following liquidity means that you are submitting to a higher time frame draw on liquidity. Now, for example, let's say this is the higher time frame draw on liquidity, and we want to follow this liquidity to this low. All right. So price is going to, this is a higher time frame. Price is going to create several AMD, right? Several AMD. Sorry, I drew that wrong. So let's say price is moving. Higher. All right. All right. So, and this is our draw on liquidity, sell side. All right. So in the real intention to draw to this low, price will create several liquidity using what AMD as the mechanism to do that, right? And let's say this is daily time frame. All right. Now we might open, probably let's say on Monday we open lower. All right. We open lower. We have sales on Monday. And on Tuesday, we might retrace a little bit, right? And then Wednesday, we have another sales, all right? And then Thursday, we might, in a sense, induce this high, come back for this high, right? So which means that what they are using AMD to do in this sense, they've used Monday, Tuesday, Wednesday to gather liquidity, all right? Thursday, they are going to induce this high and kick out early sellers, and then draw to that, this could be like early Thursday, like let's say Monday or let's say London or something, right? And this could be like Asian low, and midpoint of this could be like London open to take out this high, all right? And then during New York on Thursday, we might have this expansion lower, right? And then let's say on Friday, price might retrace back to this low, right? To do something like this, probably during London, just like that. And then we do what? Finally draw to this, right? So basically, price can do multiple of this AMD inside a very, very higher time frame condition, right? This could be like a weekly draw. All right, this could be like a weekly draw. And then we have all this kind of AMD setup as well, right? A weekly draw, mind you, we have 4 weeks inside a month, right? And then we have 5 days inside a week, right? There's a way price actually uses that to gather liquidity to draw to the real potential of liquidity. Mind you, I said we are using this, this is just a schematic. It might not really make a lot of sense to us right now. So what I'm doing right now is just, giving us a ground understanding of what AMD really means in its real context, right? AMD it's not just one random pattern like that. It is a piece of the whole, right? The O is the higher time frame draw, and the piece itself is the AMD. AMD is a mechanism that prices uses to what? To draw to higher time frame liquidity, right? And in that process, they are going to manipulate price a lot using AMD. It's a mechanism itself in which they use to engineer liquidity. Now, let's say this is Monday, Tuesday, Wednesday. Now, on Thursday, they use this. So the whole pattern here, right here, is AMD, right? And I don't want us to marry this idea that, okay, price is definitely going to follow this idea. No, right? This is a very, I've already given us variable to use. Now, price is going to present you this variable in a very, very different way, which means you have to be very, very flexible about it. You get what I'm saying now? So just because I drew something like it doesn't mean that that is exactly what price is going to always do. Of course, price usually do something like this. You get what I'm saying? But it is not, like something like this every time. Sometimes Monday, Tuesday, Wednesday, Thursday, and then Friday we trace and take this high again and manipulate this high again and then draw to the real liquidity, you know. And there's, you just have to follow the narrative. And when I say narrative, narrative means the reason why you have contest in the first place. Narrative is like why you are selling a price. Narrative is like why you are buying a price. All right. And contest in its own self is like a draw on liquidity. What direction of price? That is contest. And narrative is like why that direction. And framework comes in when you have patterns of entries, exits, and all that, the management of the whole trade. How do you enter? How do you frame price in terms of the entry and exit? That's framework. So those are the three things I work with. I work with context, I work with narrative, I work with framework. All right. So context is like the direction of the market, right? Narrative is like why that direction of that market. All right. And framework is like the entry criteria, how to frame entry, your entry model and all that business, right? What you have to understand is that all these PDRAs won't work until you have the right context and narrative. Framework is not going to work until you have the right narrative and context. Framework is always everywhere on the charts. You can have PDRs, thousands of PDR. We have thousands of order block, thousands of fair value gap. So how do you know which one is going to work? How do you know that, okay, this order block, I'm going to use this order block to sell. I'm going to use this fair value gap to sell. I'm going to use this breaker to buy. All right. So context and narrative will provide you those informations. You get what I'm saying now? So the first thing is that where is the direction of the market? What is the context? The context here is, okay, price is going to sell. Why? Because um because basically we are at higher time frame liquidity area whereby we swept liquidity and then we are expecting something to, in a sense, sell. Or you can be like, we are at premium price, and we're expecting lower prices. Price can just be, in a sense, price has been buying for weeks now or days now, and we've not been retracing, which means we are on steroid buys. So we are expecting some sort of retracement. You could sell that retracement. That retracement, which is like a retracement on weekly, it is something that is going to give you profitability on a short-term basis. Like let's say for like 2 weeks, 3 weekly candle might want to retrace, but which means that for that 3 weeks, or let's say 2 of that 3 weeks, there's probability that you are going to be profitable in that scale of time, right? So basically, context and narrative are going to give you the real information of the thing, right? And there's another thing, which is market efficiency paradigm, MEP, market efficiency paradigm. And then market efficiency paradigm is like you know, it is very dynamic. It is how the market itself actually works. It is market mechanism itself. Now, market efficiency paradigm, right? I will use this to explain. Now, this is Monday, this is Tuesday, this is Wednesday, this is Thursday, right? And this is Thursday and Friday, and then draw to that liquidity. All right. Now, I can use this leg to explain what market efficiency paradigm is, right? So now the real intention of price, you are anticipating sales in price. You are anticipating sales in price. You know damn well that if price is bullish, it's not just going to go straight down without doing any sort of manipulation. It has to manipulate price, you know, because that's their work before they go to the real potential. And to manipulate price, what do they use? They use AMD. It is very important. This flow series is very simple. It's a very simple model. Very, very simple series. Higher time frame, draw on liquidity, AMD, and the next one I'm going to talk about is openings, price openings. And that will be when I finish everything about AMD. This is just like still scratch of what AMD is made of, right? So I have to show us live example of how it really worked, how it has worked in the past. and you can test it out for yourself. It's very simple. Higher time frame draw on liquidity. Okay, what are the narrative that's going to provide me to validate my contest? Okay, what are the framework that are actually going to make me to draw to this higher time frame draw on liquidity? Right? It's very simple. So yeah, so this series is very simple. You just have to submit to the idea, right? You just have to submit to the idea and then back test it yourself and see if it's really, really working or not. So now, market efficiency paradigm, MEP. Now, this is Monday, Tuesday, Wednesday, Thursday, and this is Friday leg that, finally draw to this higher time frame draw liquidity. So what's really, really happened? What's price doing here? What is the whole storyline behind this whole manipulation of AMD? Now, when price was going down, initially we know that on a weekly opening, price goes down just like that. It didn't do any major retracement to the opening, right? So price went lower for 3 days straight, right? Okay. So this high, we have early sellers there because immediately we have that opening price. If price didn't return back to that opening price, we are not, you know, we are not really, really having the real sales because at that opening, there's going to be a lot of retrace, a lot of retails that's going to opening their buys order in that level. And then whenever price open at a new opening, right? It usually move very, very quickly away from it. And institutions don't usually have all their orders filled. So they will have to always go back to there and refill the order or, capitalize on another order to really, really, really have their position well filled before they draw to the higher time frame draw, right? So they are doing two things there. Now, let's say this is the high of the opening. Basically, we are focusing on this high. So I don't want to talk about the opening too much because I'm not talking about opening now. Openings, I'm going to talk about openings after AMD things, right? So this high. What's price really doing at this high? At this high, we have stops of early sellers, right? And there are a lot of traders waiting for breakouts. They want price to break out so that they can buy. So that is for inducing buyers. They want to trick buyers. To induce means to entice, right? To trick. You get what I'm saying now? So they want to trick buyers and then they want to kick out early sellers at this high. So that is the main purpose of price going to this high. Now, which means that this is initially engineer buy side liquidity. And this is another engineer sell side liquidity, right? So price induce this high, right? Price induce this high to draw to the real liquidity, inducing this high, kicking out early sellers to really, 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 really accumulate. The whole purpose of doing that is just to take all the stops, right? To fuel their real move to the downside, to the real higher time frame draw on liquidity. Now, my friends, what I just explained there is market efficiency paradigm. You can use this to even generate your narrative. You can use this to generate contest, which means that higher time frame draw on liquidity, you can use market efficiency paradigm to generate your narrative, to generate your contest as well. But you cannot use it to generate framework. Basically, framework requires, it requires a lot more because after the whole fiasco of market efficiency paradigm has been done, that's when framework will be creating itself, which means that you can use market efficiency paradigm in its own context to create what? To create context, to create narrative as well, right? Because sometimes context might be very, very hard to actually generate. You will have to consult market efficiency paradigm to know your context, to know what direction. And you can use MEP as well to use to generate your narrative as well. Okay, why is price actually doing this? Right? Why? Why do price has to go to this high? That is you trying to generate a narrative because price want to induce buyers and kick out early sellers for this move because the real higher time frame draw is this low. So we have to draw to that low. They have to take out liquidity first before they draw to that low. Now you have your how, you have your why using MEP. But MEP in its own context as well, you have to, in a sense, understand timing. Timing is very, very important when it comes to market efficiency paradigm, right? And that is where I'm going to be talking about openings very well, right? Openings and time are like one. Without time, there's no opening, right? There's no opening. Without time, there's no opening. So I'm going to talk about timing when it comes to the opening. So the whole key point of this, this model is very simple. It's very simple. Higher time frame draw, AMD, and openings. That is the three things that you are going to be working with. This series, it's very simple. It's a very simple model, and it is built on the market truth. What is the truth of the market? The market operates majorly on probability, which means that, and what is the nature of probability? If you look into the nature of the probability and nature of market itself, you don't know what is going to happen until price show its hands that this is what I'm going to do. And you have to work based off that. You don't know anything that's going to happen. Now, based off the fact that you don't know what's going to happen, right? And you have market mechanisms by your side, which is like AMD and opening. AMD and opening, they are very, very important. I think very, very, very much important. I think even opening of how price is going to draw to a higher time frame draw is very important. These are deep, deep things I'm talking about. I'm going to explain them very, very much more so. But this is just like an introduction to AMD, basically. Introduction to AMD. Now, I've given us a very simple, something about AMD. Now, this whole pattern actually, in a sense, it can do like this within the three sections as well, right? The section can consolidate in a range, or you can have an active move lower as Asian. Now, this is Asian high, okay? Okay, so during London, price might spike up a little bit like this, right? And then do what? Induce this low, and then it will head for this low, this high right here. After inducing this low, sometimes it might not even induce that low, right? It might just go straight up to take out this high. That is London move. And after doing that, right, what is it going to do? And then come for this low during New York. All right. So these are, when you have something like this, these are typical sell day, right? If you are going to have a sell candle for that day, this is what you are going to be expecting. And if you are going to have a typical sell week, these are the type of things that you are going to expect in price, that you are supposed to be expecting in price. And vice versa. I think you just practice that, draw it out yourself, because I don't want to be spoon feeding you guys, right? And by the way, this is not a beginner something, right? You have to really understand, a little bit about institutional concepts and all that. You get what I'm saying? So it's not for, beginners. If you are just starting forex, you cannot understand this. All right. So this is a typical sell week, typical sell day, right? And there are some time where both New York and London, both Asian and London are going to sell, right? And then during New York, price will spike, take out this low, this high right here, and then drop back to this low. Okay, so it's a matter of narrative itself. Narrative is going to tell you everything. If London is going to be like, probably still be a protraction for that day, or be a manipulation. You can see this is accumulation phase, this is manipulation, this is distribution. All right, accumulation, distribution, accumulation, manipulation, distribution. So what are they accumulating? Price was accumulating buy side here, manipulate it here, and then distribute price lower to the real target of, price or objective. Price was accumulating buy side here, manipulate it here, and then draw it lower. You get what I'm saying now? So this is the idea, right? There's one thing that I want you to understand here. AMD is a mechanism for price to generate liquidity. It is very important to understand this. It is very, very important. AMD is a mechanism for price to generate liquidity in the real intention to draw to higher time frame draw liquidity or objective. So AMD is a fractal of price, is a fractal of higher time frame contest itself, right? Is a fractal, and opening is a fractal of AMD. You can see the hierarchy now. Opening is a fractal of AMD. AMD is the fractal of higher time frame draw. Can you see the hierarchy? So which means that higher time frame draw liquidity is greater than AMD. AMD is greater than opening. They have a very, very close relationship. You have to really, really understand it. You have to really, really understand it. You can see the hierarchy. Opening, we are talking about three concepts here. Three concepts: higher time frame draw, AMD, and openings. All right, openings. So during that openings, I'm going to be talking about different type of news as well and events. All right, important events when it comes to the economic price data, right? So I'm going to be talking about major events and how they open, right? So it's very important. So basically, this is just the basic. This is just the basic. So this is episode 2 of Flow series. Episode 3, I'm going to be showing us live data, live price action of how AMD, how it's really, really how it's really, really showing itself in price, when it sells, when it buys, and all that business. But this is just the basic. I want you to understand the very basic of what I want to be talking about, really, right? But understand this. This is very important. AMD is a mechanism for institutional players to engineer liquidity, to gather liquidity before they draw to their potential liquidity or to their objective, to their real objective, right? And you have to understand that higher time frame draw, AMD, and openings, there's a hierarchical relationship between the three, which means that higher time frame is greater than AMD, AMD is greater than opening, right? Opening from now, if you are see, there has to be a synchronization of your focus from, if you are focusing on higher time frame, right? You have to synchronize your focus of higher time frame to your synchronization of lower time frame. If you are focusing on lower time frame, you have to pay more attention to the opening and AMD. And then if you are focusing on higher time frame, you have to focus your attention on the higher time frame draw objective using MEP, market efficiency paradigm. All right. So I'm still going to talk, we are still going to use real life charts to explain that very well. All right. So, but for now, this is just introduction. This is just basic. I'm not talking about opening yet, but I just give us what we are really, really working with, what we are expecting, right, for this series to complete. This is a very simple model and it has a very good high win rate because the bedrock of the series is made up of market mechanics itself, how market works itself, how it really, really works itself. When you make mistake, you know where you make it. You don't need to beat yourself up. You just know that, okay, I made mistake there. I fucked up there. It's not as if you acted out of way or something. You know you are not in line. You are not in flow, right? And then you change your ways, something like that. So, I will see you guys in episode 3 of Flow series. So this is just like an introduction to AMD. So basically, I'm going to see you guys again. Yeah, so cheers.